Morning and evening star pattern. Hey guys, and welcome back to an exclusively new video on my channel Tradingfyive. And today in this video we are going to discuss about some powerful candlestick pattern. In fact, two kinds of reversal candlestick pattern that are most popularly used in technical analysis, which are the morning star and the evening star pattern. And these patterns are really powerful in identifying a trend reversal, that is change in the direction of trend. And using these patterns you can easily capture such situation in the market. And if you don't, I have already made a lot of videos on candlestick pattern, wherein I have explained various types of single candlestick pattern, what are the reversal patterns, what are the continuation patterns in the market, and how can you use the candlestick pattern along with the volume. All of these videos are stored in a playlist. The link to the playlist will be flashing above, or you can check out the description. Alright, so in this video, I have explained the morning star and the evening star pattern in detail. That is right from understanding how can you identify this pattern on the chart, where will you take a trade on them, where to buy, where to place the stop loss, everything in this video. So if you don't want to miss this important concept in the stock market that can help you make better trades, make sure that you're watching this video till the end, do not skip it. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure that you do it so that you won't miss any upcoming videos or updates on the stock market. Alright, so let's start with this video and let us first understand the morning star pattern. Now as you can see on the screen, that is how the morning star pattern looks like. This pattern usually occurs after a downtrend or some bearish moment, and it indicates us the bullish reversal in the market. That is, after this pattern is formed, there are chances that the market may continue in an uptrend. That means we won't see downtrend in the price once this pattern is formed, and so we can understand that the downtrend will be converted into uptrend, and we can make a really good trade over here. But first, let us understand the concept, the basic logic behind this pattern. So you see, the morning star pattern is formed out of 3 candles. It is a combination of 3 different types of candles. So the first candle in this pattern is a red bearish candle, which tells us that the bears are strong in the market. They are controlling the price and pushing it downwards, and as a result of which we have a red candle. The second candle in this pattern is a doji, which is a type of indecision candle. Now remember that this candle can even be a spinning top or any other indecision candle. It is not necessary that this candle has to be a doji. Now you see, the doji candle which is formed here indicates an indecision in the market. So we can simply understand that the bulls and bears are fighting with each other to gain the control of the market, and the number of bulls and bears over here are almost similar. So unlike this, in the first candle, we had the total selling pressure greater than the amount of buyers. But right now in the second candle, we have the number of sellers almost equal to the buyers. And the third candle in this pattern is a bullish candle. It is a type of long green candle, which indicates us that the bulls have now taken the control of the market, and the number of buyers have crossed the number of sellers in the market. The buying pressure is more, so the bulls will be responsible for controlling and driving the market upwards. So you see, this pattern indicates a shift from the bearishness of the market to the bullishness. So it is obvious that after this pattern is formed, the market is going to go in an uptrend. And that is where we are going to exactly take a trade. Let me show you. Now as you can see on the screen, this is where exactly a morning star pattern is formed on the chart. So we are simply going to take a trade over here. But before trading on this pattern, remember that a morning star pattern should be formed after a strong downtrend or a strong bearish moment. If it is formed in an uptrend or in a sideways market, avoid trading on it. It is a type of false pattern and it will trap you in the market. So always trade on morning star pattern which is formed after a downtrend. So you see, we will take a buy entry after the closing of this confirmation candle, and our stop loss will be below the doji or any swing low. And it is really necessary to use a stop loss while trading. However strong a pattern or a signal on the chart may be, there is always a chance that you may go wrong. And if the market doesn't go according to analysis, it is better that we exit at the right time. And for this purpose, it is really necessary to use a stop loss while trading. So you can notice, after this pattern is formed on the chart, the market really gave a good uptrend, and we could have made a good amount of profit from this trade. So that is how this morning star pattern works in the market. Now let us look at the next pattern, which is the evening star pattern, which is exactly opposite of the morning star pattern. That is, the morning star pattern indicated us the bullish reversal, and the evening star pattern will indicate us the bearish reversal in the market. So this is how this pattern usually looks like on the chart. It is formed out of 3 candles just like the morning star pattern. And the first candle in this pattern is a green bullish candle, which indicates us that the bulls are driving the market, the bulls are in the whole control of the market, and the sellers over here are not enough to stop the bulls. The next candle which we get is a doji or any indecision candle, which indicates us that the bulls and the bears, both of them are fighting to gain the control of the market. And as a result, we get a candle with a very small body, which in most of the cases turns out to be a doji candle. And the third candle that we have is a red bearish candle. This candle tells us that the bears have won the fight and gained the control over the market. And so here the selling pressure is way much greater than the buying pressure in the market. So as a result, the market will continue in a downtrend. And so it is obvious that we can surely make a trade over here. So as you can see on the screen, this is the chart, and after a good uptrend in this area, we get a type of evening star pattern which is formed on the chart. So we will take a short entry at the closing of this candle, and our stop loss will be above the doji candle. So in this trade, we could easily make 1:3 return because the market acted according to analysis. And that is why I am telling that these two patterns are really powerful reversal patterns in the market. These patterns will work most of the times, but remember that they won't work every time. So always remember to use a stop loss while trading on this pattern or maybe any other strategy. And you can even use volume indicator to have an additional confirmation on this candlestick pattern, or maybe any other indicator like moving average or RSI. I have made a video on how can you use candlestick pattern plus volume, which is saved in the playlist, and I will soon make a video on how can you use various candlestick pattern using indicators like RSI or moving average support resistance concept. So make sure you subscribe to not miss them. Alright guys, so lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video to as many traders as you know. Subscribe to this channel so that you won't miss any upcoming videos or updates on the stock market, technical analysis or trading, as well as press the notification bell. Alright then, I'll see you in the next video.